All right, I need everybody to go on Rumble right now and follow my page so you don't miss out on any videos or live stream. When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon.
Standing. Many of them wearing yellow. They're running yellow's back. He's American.
What's going on, everybody, and welcome back. Feels like I haven't done a live stream publicly in a long time, but I'm happy to do it. This is our Q2/April/weekly prep. I personally like doing these because now we can get the big picture. We can go all the way from the top down in terms of our analysis to come to conclusions using information that has just been presented to us with the formation of this new quarterly candle. Okay. So if you haven't already, please like this stream. I am now doing them on both Rumble and on YouTube. So I will be sharing things on YouTube. The reason, basically, I know a lot of people use YouTube, and for me personally, for me to keep everything for the 2025 mentorship together, it is much easier if I just stream it there as well. Okay, so I'm not going to be able to see if you have any comments on YouTube. I do not think that will transfer over to Rumble Studio, which I'm using to produce this stream. But if you have anything, of course, just come on over to Rumble. All you need is a Gmail account, and you'll be able to comment and do whatever you got to do there. So towards the end, I will take some chart requests going forward. Of course, analyzing from the top down now that we have this new quarterly candle. But we'll also go through a wider market overview as well with indices, that being NASDAQ and the S&P. All right, so first things first, let me come on over here and let's talk about Seeker's favorite coffee really quickly. Okay, so weak coffee is for the weak, and at Rumble, weak has never been part of the mission. No fillers, no fraud, and no settling for mediocrity, just like 1775 coffee. It's small, single origin, small farm, hand-picked, specialty-grade coffee that stands for quality, free speech, and calling out BS when it matters. Forget stale, mass-produced beans, roasted just enough to hide the flaws. Dark roast hits like a Trump tariff. Medium roast hits, keeps it bold without the bitterness. And Vitality Mushroom blend real energy and lasting focus, no synthetic garbage. For K-Cups, whole bean, or fresh ground coffee, go to 1775coffee.com. Use code STUDIO for 15% off and start your morning with coffee that stands for something. And every single dollar spent enters you to win a Cybertruck and $30,000 cash. So hopefully, I hope you win the Cybertruck, but don't park it in a bad area where it might catch fire. Okay, so first things first, as always, we'll start with the top down. We'll work our way, but we're going to start with the indices, and more specifically, we will go with NASDAQ, who had a pretty awful month, but and quarter for that matter. But here's our market overview. All right, so looking at NASDAQ, obviously last month, or last quarter, I should say, was a pretty painful one for those bullish, okay? Just the first thing I want to point out is that we currently are dealing inside of this range, the lows of October 2022 up to our highs that were formed in the fourth quarter of 2024. Okay. Now, with that, this past quarter, we did create a bearish order block here on your quarterly time frame. Okay. What's alarming to me at this point really is that if I look left, I notice that we really do not have any imbalances to catch us at this point, right? Look left and you'll notice that there's no imbalance here. Okay. There's really no imbalance until we get down into the 16,334 area, which is pretty scary, okay? But as we go down in time frame, we can walk that down clearly, right? It's so easy to say, oh, we're going to crash, we're going to do this, right? Just log on Twitter. You're going to see it all over the place, okay? But for me, I want to methodically break this down into what would really make sense for us over this coming 3 months, okay? Because as you know, and I'm sure even if you're newer to my content here, you are probably aware that things don't go up or down in one direction, without any sort of retracement or pullbacks or anything of that nature, okay? But if we also look left, there's also one more thing that I want to take note of, and that is that we do have relative quarterly lows here and here, okay? And again, there's no imbalance holding in between, okay? So look, at the end of the day, you could say, all right, well, we're going down, right? And I would say, hold that thought for just 1 minute, okay? While I would probably agree with you that from a higher time frame scale, things aren't looking all that pretty for tech in particular. But if we were to start to work our way backwards, okay, and we can move down, and let's go look at this monthly time frame as well, okay? Here is the biggest catch of them all. And this is why, me personally, I think that Q2 of 2025 is really going to set the tone and kind of give us the answer as to what we're going to see for the rest of the year. Okay. And I know that might sound like this grand statement, but let me explain. Every time throughout history, this is something that you can back test and you can prove it to yourself. All you need to know is what an imbalance is, okay? And I know if you've been here for a while, you've probably heard me say this about 5 million times, but for every single time throughout history, we've had a quote unquote bear market or quote unquote stock market crash, we have had one thing that would occur consistently anytime that we've had this higher time frame overarching retracement, okay? And that one thing is the formation of a monthly bearish imbalance, okay? And this is not, don't take my word for this. I want you all to go back and back test this and prove it to yourself. That anytime a bearish imbalance is formed on the monthly time frame, we have continued to get a downside retracement into a discount bullish imbalance for your next leg higher, okay? But here, because I have you here, I'm going to bore you to death and I'm going to show you, okay? Now think back. When were the last couple of retracements we have, right? Automatically, I'm thinking if I had to read your mind, you're probably saying 2008 or 2000, the tech bubble. How about COVID, right? Or even beyond COVID, what about 2022? People forget we had a bear market just 3 years ago, right? And I think that would even be, confirmed by the definition, right? But if we go back and we look every single time that this has occurred, bearish imbalance, you have then retrace down into discount. And there's going to be one more thing that I'm going to highlight here, but I just want to show you. So this was our 2022 bearish imbalance formed. There's your retracement, rest of your bear market, okay? When you go to COVID, remember how fast COVID happened, right? The whole drop and everything like that. Take a look. See that big gap down? That is a bearish volume imbalance, aka a bearish imbalance, right? That's a bearish imbalance. So we're 2 for 2 so far. Okay, let's continue back. Okay, this doesn't seem like much, but if you go back to 2018, you did form this bearish imbalance, which ultimately got you down into discount of your current dealing range here. Okay, that one I wouldn't even count, but still plays. Okay, let's come on over to 2008. Let's zoom in. Okay, 2008. Okay, this is January of 2008. That is when the imbalance was created. Price then takes 4 months to retrace back up into it, right? You don't hear about that. All you hear about is that crash, right? Here's the retracement into that bearish imbalance. There's your flush, okay? And then one more time, we'll go back to 2000. Here's your bearish imbalance. 1, 2, 3, 4 months yet again. Price retraces up into it, and then we flush, okay? So take that for what it is, okay? And I know that, this time could be different, man, right? But I will tell you this. April in itself has a lot cut out for it in terms of what the bulls need to do to take care of the prevention of this bearish imbalance, okay? So from this point, if we close April below without touching, this is really the key point here. If we do not touch 20,460.50 at any point this month, so right now where we currently stand, that is 1,140 points away, okay? If we do not get 1,440 points or 440 points, whatever it was. Even a tap, that's all we need. All you need is a wick to prevent that from forming. But if that were to form, I then look to myself and I say, okay, every time we form that imbalance, what happens next? Okay. So April is big. April has a lot at stake here, in my opinion. And that is why I believe that going into quarter two of 2025, this will ultimately set the stage for us moving forward here. Okay. Looking at it from this perspective here, look, I as I've been saying, and I would encourage everybody to go look at this as well. Go back to my first stream of January 2024, okay, which was, I don't know, somewhere in this vicinity here, okay? I don't know if anybody would remember this off the top of your head, but this one really sticks out to me because that first week of January 2024 was brutal, okay? We got slapped. Market got cranked, okay? Ultimately, here, I'll pull up the weekly just so I can show you guys. Here, okay? This candle right here. And, from the looks of it now, you're like, oh, that's peanuts, right? Ultimately, that's 18,200 down to 17,500. That was an 800, 700 point drop within a week, okay? And from that point, if you go back to that stream, the first thing I said, until a higher time frame imbalance forms, I'm not really concerned with this whatsoever. Ultimately, played out true, right? And it's been really the same story, okay? Now you look at it, from as many different ways that you would like to look at it. That is obviously the biggest contingency that I have moving forward here, going on into April, May, June, of course, and really April is the one that's going to really be helpful for me here from a monthly perspective. But if you go down, you're going to start to notice that we actually shifted structure here on a even smaller time frame here, looking at the weekly. Okay, by taking out this low that created that price run, we have then shifted structure from your highs down to your lows, right? Notice how there was no discount retracement here. Therefore, I cannot be using that as this high as the beginning of my new range. We never got down into discount. We are still expanding inside of this range, okay? Now you look left and you see, okay, are there any imbalances to catch this? And that's what's, worrisome to me personally, is that you look left and we really don't have many imbalances that we're working with, even on smaller time frames. I think we have one daily imbalance left that is pretty large that we're working inside of, but otherwise we're really not working with much. And that's why moving forward here, to me, clearing things up throughout April is what's really going to give me a good indication on how price is going to perform over the next 2 quarters to close out the year, right? So with all of that being said, I think it's also worth noting that, just take a look from this monthly perspective. Following the first imbalance formed, the next month got in. So it was a whole other month, right? Think about that, right? Your psychology and you're going to be baited, right? You see this strong green candle off of these lows, up, bottom is in, time to go, right? When in reality, you're just pushing into this bearish imbalance. And, you might say, oh, well, it's easy to see it after the fact. Sure. But think about it. Inside of this range right here, think back to everything that I've ever shown you guys on how I go through on a day-to-day basis on how I digest the market, right? You have your current range, which is your low, up to your high, okay? When we are establishing a range, right? Everybody in Galaxy, I'm sure you're going to be able to answer this, but I want to kind of flow through this quickly. The first thing that I'm looking for to imply to me that we are going to see discount of that bullish range, because historically, and this is something I could show you guys as well, historically, what the market does, and this goes for any stock, any indices, any crypto, you name it, you get your specific run, you then price will ultimately retrace down into discount of that range, which is below 50% of that range, more specifically into a bullish imbalance, which then creates the next leg to go run for those highs yet again. Look back on anything. This is why I use this model, because it happens on any time frame, any ticker. It does not matter. And once you see it, you will not be able to unsee this, okay? But what is the first thing that I'm looking for to really imply that price is going to see discount of a specific range? And that's that formation of a bearish imbalance, right? We're talking about this from a wide scale. This is something that I use on a 5-minute, on a 1-minute time frame. It doesn't matter. The same concepts will apply throughout each one of your time frames, okay? So now, while we're looking at this larger time frame approach, the most important thing for me here to understand is that we need this formation of this bearish imbalance for me to feel really comfortable about us seeing this 50% mark, Okay. And now I can be bearish in the short term. I can even be bullish looking for smaller time frame runs, right? We know price doesn't go down in one direction forever without any sort of retracement, right? But the thing here is, if my overarching idea is that ultimately Nasdaq's going to form this monthly bearish imbalance, and if that forms, then I'm ultimately looking for discount. Where's discount? Down in this vicinity here, which ultimately gets you down into 16,455 right here. Okay. Now think about this. What happened here on our most recent price run from your lows of COVID up to the highs of 2021? You got your discount retracement from a monthly perspective into a bullish imbalance for ultimately a run through highs, aka the Mando model has been completed. Okay. Now, when the Mando model completes, we need to reset our range from our lows up to our high, a discount retracement into a bullish imbalance for the ultimate run through highs. Okay. So this is really what I'm looking at moving forward here. And it really, I hate to put so much, emphasis on this, but this April candle is extremely important to clear up what's going to happen, in my opinion, over the next couple of months. So, I hopefully that was, kind of broken down in a way that you can all follow. So, oh shit, that got stuck. My bad. So that is, basically just where I wanted to go with the overall index. So, does anybody have any questions about how I'm viewing things from a higher time frame here? And if not, that's good, because now we're going to look at the S&P 500. We'll do the same exact thing. Yep, 2008 had much smaller candles than what we're seeing now, right? And people have actually asked me about that, and they say like, price has like never moved this dramatically, and what could that be from? And I don't know. I mean, I think about it, and I try and like put together some sort of like I don't know, breakdown as to like why I think that is. And ultimately, I think it has something to do with the, amount of money that was printed and the influx in liquidity that was caused due to COVID. I think that plays a huge role in it, right? You just see the size of these candles that we're putting in now. It's just not even close. Yeah, I'm glad I missed the toenail saga while it was happening. Yeah, that was pretty funny. All right, so now because we went over Nasdaq, and Nasdaq, if you're more interested in the explanation as to why I would start with Nasdaq and why I go that way, for a long time Nasdaq was the leader. Nasdaq really was leading the charge over the rest of the indices over the last several years, really. But also just think of the names that are associated with Nasdaq, right? You have Nvidia, you have Apple, you have Microsoft, you have Google, you have Tesla. Like, all of those names are really coinciding with the overall index with heavy weighting. So that's why I tend to pivot more towards Nasdaq right off the bat. But just to be fair, I think it's worth looking at the S&P and see if we could see anything different, right? And we actually do. Okay, so let's pull back out and let's just go from a quarterly approach on the S&P here. And what you'll notice here on the S&P, it's just even crazier of a current range, right? So you'll notice that looking at Nasdaq versus looking at the S&P, you actually are inside a bullish imbalance on SPY, right? SPY's quarterly time frame here, we are inside it, right? So we're thinking back, and remember what we talked about on Nasdaq. If this April candle does not prevent the formation of that bearish imbalance, right, I think personally we're in some trouble. But now you look over at ES and you're saying to yourself, well, we are inside a bullish imbalance. Now here's the thing. As much as I would love for all these bullish imbalances to perfectly work, here's a secret. There are certain imbalances that are way more effective versus ineffective. Okay. And if anybody who's learned about the imbalances, maybe watched my video or something like that about them, and you were curious, there are imbalances that are I guess the word would be better than others. And the ones that are better, or the ones that perform better, back testing over a longer period of time, would be imbalances that are specifically in discount of your current range. For example, Here's your previous low up to your high, okay? You'll notice that this imbalance right here, look what happens to this imbalance. Ready? Right here, okay? That imbalance gets washed. Why would I not anticipate any sort of movement off of this particular imbalance? It's in premium of the range, right? So let's backtrack and let's just draw our current range from lows up to our high. This imbalance is in premium. Me personally, I do not value premium imbalances for this reason. I've seen it way too many times where they get sliced through, right? If price is seeking a discount or seeking liquidity lower, where would that be in this particular case? It's right off 50% here, right? Anything below 50% inside a bullish range, you're discounted price. Anything above that 50% mark, you are in premium of that current price run, okay? Think about it. Go on Twitter, go look for somebody complaining, and they're talking about, oh, it broke out, but it fake broke out. Huh? What? Did it? Did it really? Or are you just working with premium levels inside a much or quote unquote extended range, right? If you didn't want it down in discount, why do you want it up here, right? That's always the question I try and ask myself to bring myself back down to earth when I'm thinking about buying something that might be well in premium of a range, right? And to me, it helps, right? You just think logically. It's like, wow, okay, we are way farther from equilibrium or fair value of a given asset, right? At this current point, 50% or equilibrium of this specific S&P range is all the way down here, and we are currently up in premium. Now, does this mean that we can't just get into this and start making progress higher? I'm not saying that at all, right? And that's why, to me personally, I think the April candle is going to be so important for how we're going to kind of dictate throughout the year. Because right now, I think we are really seeing a higher time frame trade taking place, and we're just living the day to day, right? So we can be trading it on a day to day basis, however we feel fit, but right now, I think we are seeing something on a much larger scale taking place, which is again, it's almost a quarterly or a monthly trade taking place, and we're just there intraday working through it. But it's the same thing would apply here from a monthly perspective, where you look at the S&P low up to your high. We are well in premium of this current range. Okay. The reason I have it marked from this point versus here is due to the fact that we created a breaker down at these lows on the S&P while we did not do so on NASDAQ. Okay. So our range is really big on ES as well. This to me really is kind of, last hope in terms of bulls for the S&P in particular. Because you look left following this imbalance and you really aren't working with much. There's no imbalances here until you get much deeper into discount of this range, right? So is there a path? I think, yeah, there's a path. Is it something that to me is, all that likely? I'm not so sure about that. And that's why I think ultimately this April candle is going to be as important as I'm trying to illustrate here. So that is again, that's just an S&P outlook. It's very similar to the previous. Now I'm going to throw one big wrench in the whole thing, and I'm going to talk about Bitcoin. So let's pull up Bitcoin here. Again, we'll start from our quarterly and work our way down as we do. Okay. And one thing you're going to notice here on Bitcoin is that this past month, or this past quarter, I should say, we actually created a bullish quarterly imbalance. Now, again, this quarterly imbalance is in premium of the current range, but we have not touched this imbalance quite yet. Okay. So from your range set back in October of 22 up to your highs of 2025, here's that imbalance that was created. And ultimately that'll get you to 76,600. So I would not be shocked if we see at some point to start out this quarter, price get down to that 76,600. And from that point, we'll see what happens. But this would be an area in which I would, think that there would be some sort of bounce from. And ideally, as someone who is bullish and wants to see price go higher on Bitcoin, ideally we get in and we get out, ultimately painting another order block, right? Order block, order block, dunk, order block, question mark, right? So that's my take on Bitcoin, but very, very different from what we've seen on NASDAQ or the S&P, right? This is a whole different animal. We're not really working with the same type of criteria here. The only thing you could argue is say, well, ES could very well wick previous quarters low and then snap back to finish April strong. And I would agree with you. But, to me, right now, we're kind of kicking the can down the road a little bit to see if that monthly imbalance is ultimately going to form for April. So anyways, those are just the big three that I'm, keeping tabs on ultimately. I mean, we can look at Dow, we can look at Russell. That's fine as well. If someone wants me to pull that up as well. But those are just some, or just the kind of overarching ideas moving forward here. And I know it sounds crazy when I say right now I'm seeing this as a higher time frame trade taking place on a smaller time frame, right? There's been way more days of pretty poor price delivery recently than what we've had previously, right? There's been some days where, I'm seeing in the chat, oh, I'm just waiting for this entry. I'm waiting for this entry, right? That's happened a lot more recently than what it had, over the months prior. And that to me also leads me into that idea that ultimately we are kind of in the middle, or we're, our day to day right now, we're kind of operating inside of a much larger overarching trade taking place. So, so that is, indices, that is Bitcoin. I will look at some individual names right now, of course, but I really wanted to just kind of take care of business. So if you were late and you're kind of just, looking for the minutes here, I think April is going to be an extremely important month, and Q2 is going to dictate the performance of the rest of the year. That is my hot take. If it's even that hot, I know it's like a 3-month long take, but to me, for me to go to any smaller time frame and make some wild statement, I believe that's really, really difficult to do. So, so yeah, that is what I got on the indices. All right. So does anybody have any questions or anything like that? If you don't, if you do, put them in the chat. I'll get to them. But now I'm going to start. I'm going to go through some individual names that I'm planned on going through. If you have any that you want to go through, if you look at what I most recently retweeted, the stream link, which you could also share too, that would be cool. Just where it says send some requests for the stream below, I'm going to click on that and I'm going to go through them. If you're on Rumble, put them in the chat. I'll get to them as soon as I can. Okay. But if there's a backlog, it takes some time for me to get to them. Just a heads up. All right. So first things first, and I really wanted to do this one, but then there was this really annoying guy who was asking me to do this one. But I'm going to do it anyways because I want to see this one myself and I want to walk it through. So we're going to do Tesla first, okay? So let's see. We'll go back to our quarterly, of course. How is is this better? Is the sidebar? Like, you tell me, what do you, I think this is probably better, like something like that. So anyways, let's take a look at Tesla from our quarterly. Again, we got the new quarterly about to paint tomorrow, and we'll look how we kind of finished out. All right. So let's go and rewind a little bit. Okay. This is going to be a recurring theme because, again, like I said earlier, the discount retracement into bullish imbalances for your runs on high is something that is a recurring theme throughout the kit, and that is the Mando model. Okay. Back from 2019's lows up to your highs of 2021. Here is your discount retracement into a bullish imbalance here on your quarterly time frame. There is your run through highs. That is the completion of your Mando model. Okay. So from this point right now, I need to reset my range. Okay. Here. Okay. And I know this sounds silly, but when we take out the high to complete the Mando model, one of two things are going to happen. You are either going to go up or you're going to go down. Okay. How is that? How can that be helpful? Okay. Well, if we're going to get that continuation type move, right? The quote unquote breakout, right? We're actually going to form an imbalance up through this to I guess prove to us that price is going to get that continuation move. If we're going to go down, you will notice that whatever candle, whatever time frame you're looking at, we are going to close below the previous high, right? We are not accepting that liquidity to the buy side for continuation. We are taking that liquidity, taking all those stops out to ultimately drive price lower, to search for more liquidity. Now, when I look at it from this perspective, I ask myself, okay, like at this point, this is what my current range is looking like. Why can't I use this range right here? Well, low, high, discount retracement, bullish imbalance, run for highs. Manda model is complete. When the Manda model completes, we have to reassess our range. Okay. So here's your low up to your high. We got discounted. Fantastic. And one thing about Tesla that varies, quite a bit from a lot of the other names is that we actually created a bullish imbalance here on our quarterly time frame, right? This quarterly imbalance was formed back in July of 2024. You might say, oh, those levels still apply. Well, guess what? We got into a bullish imbalance and discount in October of 2023 that was created in 2020. Is that good? Does that still apply? I mean, I could show you a zillion examples of this, but I'm just goes to show that these old levels that are not touched doesn't mean that they just go away. If we buy into the idea that all of these candles are painted through an algorithm, right? This is all algorithmic price delivery, right? Those previous levels don't go away. If price works up through them, sure. But ultimately, like they don't go away just because it's 3 years later. When we look at it from our higher time frame lens, we're getting a much more clear and precise vision moving forward. But this is what our current range looks like from our low up to our high. We did not accept this all-time high liquidity here, okay, after completing that Manda model. So logically, where do we think ultimately price is going? And to me, from this point right now, I think Tesla is going to ultimately see 212.11, which is a quarterly low, but also gets you into this quarterly imbalance that was created back in July of 24. Right, that is if we get this maintained weakness across the board, which I think could very well happen. But now I think to myself, if price on Tesla ultimately comes back down to that 212, I'm just trying to talk through my thoughts, right? And I anticipate a bounce from this point back up to those highs. Does like an overarching higher scale bear market really make sense? And that's where it kind of becomes a little fuzzy, right? I'm like, well, last time, Tesla was down here, we were pretty much, where we are currently, right? We're 19,301, maybe a little bit lower. I forget exactly what the mark was on that low. Where is it here? Back, so like right around this area in March. Is that enough to get this larger scale bear market? I'm not so sure, right? So that's just a little bit of a wrench, but I would anticipate ultimately Tesla retracing into this area prior to making that next run back up to that 488 mark. And that, again, is from a quarterly perspective. Now I zoom our way down and we take a look at what we got going on here from a monthly perspective, right? So if I look left and I say, all right, where we currently stand, this all, checks out pretty good. Okay. There are a couple relative equal lows, again, the ones that would get us into that quarterly imbalance. And this is a previous bearish imbalance turned bullish, what we would call an inverse fair value gap. Okay. Price got in. So far, so good. But we did form this monthly bearish imbalance. To me, one shot through this seems pretty unlikely. But do we see price ultimately go here first prior to ultimately retracing down lower first? Let's take a look. We're going to keep working our way down. Okay. Now, from a weekly perspective, we have a high down to our low. Okay. We created a weekly bullish volume imbalance here. Price gap down to start. Price got in and price is leaving already, right? Still 4 days left in this trading week. Okay. So this is pretty good. If this bearish level can mitigate, which means we make our way up and close above this, or form a new imbalance in the process, I would then be expecting 328.38, which is 50% of this bullish range, to complete my second model, which is OddNAM. Okay, it's the inverse Mando model, where I am awaiting the first imbalance to form in order to look for price to then make its way up to 50% of this bearish price run. Okay. So while I'm not sold from a quarterly perspective, I think this is still on the menu. This could happen, right? But from a shorter time frame perspective, looking at this imbalance here, this is the mark to beat. If we can beat this 273, then I think 328 is on the menu. And I look at it from the monthly, that's us getting into this monthly bearish imbalance. Do we reject from that point? Is that the formation of that April imbalance that we referred to from a NASDAQ perspective to ultimately drive price lower over the next coming months, to maybe put our foot in the ground later on in the year and start making progress? It's just all possibilities that I'm running through my head, and I'm trying to make this most sense out of, or trying to make the most sense at this current time. But where Tesla stands right now, I mean, this imbalance being created is good. The reaction out of this imbalance is being good. And even look, we zoom in here. How much more perfect do you want to get than that? Where do we gap? We gap to the bottom of that bullish volume imbalance perfectly, and already today started to move up and through it. So, like I said, this quarterly imbalance is a little suspect to me, but do we necessarily need to see this? I don't know if that's the case. Would this seem logical? Would this make sense to me? Sure. But from where we are on smaller time frames, it doesn't look half as bad as what, it would look like from the grand scheme of things. So Tesla, honestly, this is one that I'm going to be keeping eyes on, and no more than, it's not that the setup looks good, right? A lot of setups I'm sure you can justify and make sense of to look good for you. The reason why these types of names light up for me is that the size of this range is pretty big, right? So even if it's just a discount retracement into a bearish imbalance to set you up for the flush down through lows, this is still a pretty big range. There's a lot of points to be had here. So that's why Tesla to me is definitely something of interest. And like I said before, you look at it from a NASDAQ perspective, and while NASDAQ does not, to me, by any means look all that good, you pull up an ES, and to me, you could definitely justify price getting into this quarterly imbalance and making progress back to the upside, right? So that's the wrench, and that's why I think April is so important, because if April forms that monthly imbalance, this is going to be the recurring theme of the night. The last couple of weeks, the recurring theme was, until that first imbalance forms, I'm not looking for any prolonged period of upside here, right? Now, the recurring theme here is, if April forms this bearish imbalance, I will be bearish for the couple of months. But if April does not form that bearish imbalance, then honestly, nothing really changes here inside of this bullish trend, right? All it looks like is a little bit of a hiccup before moving higher. And you could even look at it from the SPY perspective. Look at every time SPY gets into, even if it's in premium, a bullish imbalance for the first time. Right here, boom. Right here, boom. Right here, boom. Okay? Question mark up here. We haven't done it yet, but so I'm not ruling anything out. The higher time frame, especially from NASDAQ's perspective, does not look great. ES, you can justify it. ES makes a little bit more sense, but that's why I'm putting such an emphasis on this April candle. I don't want anybody to come out of this thinking, oh, Mando's bullish, Mando's bearish. In this intermediate, until this April candle gets finished and the start of quarter two is put in, I'm really pretty indifferent right now, to be honest with you. I feel like there is a way. I think it's a little bit of a reach to justify a real strong move here to completely erase that April imbalance. But I also have to respect that. I can't jump on this bear train until it proves it to me. And what would it prove it to me? The formation of the bearish imbalance. I'll take my historical price data where we went through all of the monthly imbalances forming to ultimately get me to a place where I believe, if that imbalance forms, we're going to get in it and we're going to get out and we're going to start going lower, right? But until that forms, I cannot front run it. Think about all of the people that have front run this thing talking about the crash for 2 years now. Where are they? They're not on Twitter anymore, I'll tell you that. And in addition to that, not only did they miss one of the sickest bull runs ever, they also got stopped out of 7 million shorts if they actually even push buttons and trade themselves. So, and I know it's all kind of just circling back to the same, overarching theme here with, NASDAQ and the S&P. But think about it. All of these names, especially the ones that we all want to look at. We all want to look at Tesla. We all want to look at NVIDIA. We all want to look at Google, Apple, you name it. What's the recurring theme between all of those? They're both heavily weighted inside SPY and NASDAQ, right? So that's where it all comes together. But that's Tesla. If anything, while I could say that this quarterly imbalance on Tesla, that you could totally justify that, right? You could totally justify. Where is it? Let me pull this back up. You could totally justify that. But when you look down into smaller time frames, there's still a case to be made. If there's no sharp rejection this week and you get an up close candle here to start making progress through this weekly bearish imbalance, to me, why not? You have your imbalance form. Even if you create an imbalance here, we know what happens next. 50% here. Imbalance form, gone. Imbalance form, gone. Okay. This is inside an overarching bullish structure on Tesla because historically, you zoom this sucker out, you're working with a bullish range historically, right? So that's why the time frames become important. That's why being able to, I call it surf through the time frames, right? You're going from the top down, trying to ultimately take as much information as possible to try and make the most pinpoint, accurate assessment that you can. But that would be Tesla. All right. So watch list tab is much better. Small watch list tab. Gotcha. All right, cool. Yeah, I'll keep that. I just got like a big monitor and it sometimes it throws off the specs of the picture. All right, so that is our baby Tesla. Okay. So now let's continue on this road here, and we will look at NVIDIA, another one that everybody I'm sure wants to take a look at, eh? Okay. And just to be fair, this one looked pretty scary as well. Okay. So if we're taking a look at NVIDIA from a quarterly perspective, okay, you have your current range. And let me just show you the last time we had a low up to our high. Whoops. We retraced into a discount bullish imbalance. Here's your bullish imbalance. And then you ran for your highs to complete the Manda model. That was back in 2023. So our new range is what we're currently working with here, from your lows of 2022 up to your highs of 2025, okay? This right here is a bearish quarterly order block that was just painted, okay? We did not close above previous quarter's low, which is not really all that encouraging for me at this time. But you look at it from a wider lens and you say, do we have an imbalance anywhere to our left? Not necessarily. When you look down into discount, we do. That gets you into $75. Now, with a $75 NVIDIA, what damage does that do across the board? If that were to happen, right? We got to look at the monthly, of course. It's all coming, it's kind of all circling back to the same idea here with our April candle. But this is what we're looking at from a quarterly perspective. Now, if we work our way down, let's go over to the monthly. Okay. And let me shrink this watch list for a sec here so you guys can see it a little better. All right. Zoom it. Okay. Now, your current range from a monthly perspective, your lows of 2022, again, I'll show you the Manda model here again. So from your lows up to your high, here is your discount retracement into a bullish imbalance for a run through highs to complete the Manda model. Okay. Now, and again, let's just see, for example, it's very small, but ready? First imbalance forms, price gets up into that first imbalance, right? The first monthly imbalance, there's your rejection down into discount, okay? I'm not crazy. Everything that I say here, you could back test for yourself, I promise, okay? So from your lows up to your high, we have a massive range. Nobody's disputing that, right? But did we form that monthly imbalance yet? No, we did not. No imbalance here, no imbalance here. If price at any point this month on NVIDIA gets to 113.09, that prevents a bearish monthly imbalance from forming, okay? So in all reality, I'm not looking for this 75. I know this looks juicy. I know people are salivating. But I can't be looking for this until it proves it to me here from a monthly perspective, which at the moment, again, all we need to see is at some point, 113.09, that prevents the formation of a monthly imbalance. Nothing changes, okay? We have multiple bullish levels here, and while they've gotten tagged and filled already, 1, 2, 3, 4, 5, this is the 5th month that we've seen this imbalance here. We still don't have that imbalance. And again, I just showed you an example here, but I showed you on NASDAQ earlier as well. Until that imbalance forms, I do not feel so confident that it's over, right? Because when you think about it, notice how every one of those NASDAQ, they gave you an opportunity for price to come back into that imbalance, right? And it's the same thing here for NVIDIA, right? And I'm sure we could do the same exact thing for Tesla. imbalance forms, price gets into it, does not take out the high of the candle that created the imbalance. Your stop loss is intact if that would be a trade that you would, envision taking. And price ultimately rejects lower to get you down into discount to complete the odd man model. That's all it is. And you'll notice that this is over and over repeating. These two models, this is what makes price action. These two models, without these two models, there's no price action, and vice versa. It's just how price is delivered. And that's the point that, I slowly, I know some of you are starting to come around and starting to see it more, but once you see it, you can't unsee it, because this is all it is, right? So while there's certain contingencies in place, like the formation of the first imbalance, until then, really nothing's changed, right? Think about it. There's been pretty ugly red candles thrown in the mix here, but these did not create bullish or bearish imbalances to suggest that price needed to come down into discount, right? So while I don't necessarily love the look from a quarterly perspective on a NVIDIA, say, the monthly, can you justify a move higher? You can. Can you justify that downside move for a prolonged period of time? I don't think you can just yet. We don't have that monthly imbalance. And this is, again, is just the recurring theme of the night, right? That April candle is so important to my analysis moving forward, that without it, I don't necessarily want to say that it's untradeable. You can absolutely trade this from a smaller time frame outlook. But just to be fair, when we don't have that higher time frame compass or that higher time frame draw on liquidity where it's clear as day, right? Think about it. If I go over here, and I'm just going to give myself a little pat on the back here, but here, if I pull this up and I go to, where is it? It has like oh no, here it is. Okay. And I'm just going to use Tesla as an example here. I have many of them, but, you might notice I haven't been tweeting many individual names out recently. And really, the reason why I'm not doing that is because I do not believe this draw on liquidity is clear as day, something that I would want to share publicly. But when you look at this, here's 6/19/2024. Where's 6/19/2024? Okay, right here. Okay, price of Tesla at this point was 177. We'll even say 180, whatever, somewhere in the 180s, right? Just to be, we'll split it down the middle. I don't know exactly what it was on 6/19. But look at the tweet, Tesla 414. That was when we were at $180. How in the hell did I feel so good about price ultimately making its way up to 414? That to me was because the draw on liquidity was so clear. Why was it so clear? Just pull up the yearly. Pull up the yearly, please. What is it? No way. He wasn't kidding when he was talking about the Mano model being the way price delivers. Holy crap. Low, high, discount retracement, bullish imbalance, run through highs. Mano model complete. Timing wise, was it a pain in the ass at times? Yeah, a little bit, right? I wanted Tesla to go like here, right? But it wasn't the case. Ultimately, we got the job done. But then you look again here, and I reiterated, look, from this point, this is at 2 something, even if you want to say the high of the candle, 260, 250, 14, right? That is where I felt price was going. Why did I feel so confident about that? Because to me, the draw on liquidity was extremely clear. Right now, I do not think that we're working with clear draws on liquidity. Or if we are, we do have clear draws on liquidity. The problem is it's 2 of them that's pretty damn clear, and I feel like I can justify them in a pretty strong way on either side of the coin. And I don't want to, and I don't want to be, hammering down on something that I can justify well in either direction. That doesn't make much sense to me. I'd rather get a much more clear name, take that much clear name, and ride it, versus try and say, oh, well, at this point, I can kind of give you a thesis for this. I can kind of give you a thesis for that. I don't want that. I want it to be really clear, almost like, oh, wow, this is like perfectly my model. Okay, no problem, right? That's the way I would prefer it. But anyways, that just kind of goes to the, point that I'm trying to make, that I feel as though if I can get a April candle, whatever it is, whether it's a formation of a bearish imbalance, whether it's not, don't really matter. Whatever that formation is going to be, that is what is going to be my compass moving forward over the next couple of months. Now, at that point, would it be much easier, say, if we just formed the bearish imbalance and got it over with so that we can then target discount of this range for our next run higher? Yeah, that would be really easy. But if we prevent that monthly from forming, now it's kind of a little bit more limbo, right? We didn't create that imbalance. Unless we create a bullish imbalance, we're still kind of in limbo. We're still, where we've been the last 3 months, which ultimately hasn't been the most fun. So that is that's NVIDIA as well. I know that was one that a few people want to talk about too. So beautiful. We have a good question. How would you handle if price creates the monthly imbalance but gets into discount with no test of it? Okay. So this is a great question, and I'm going to use NASDAQ as an example of this, okay? So where is it here? Okay. So the question really is, what if we form this imbalance, but this April candle is so nasty that ultimately we come down into discount, right? Doesn't seem likely for, say, NASDAQ, but, you look across the board, that could be the case, right? Maybe in NVIDIA, maybe you get a new candle on NVIDIA that ultimately drives price down and you create that imbalance, but you get down into discount. Personally, once we get down into discount, I'm no longer looking short, right? Even if we're just forming that imbalance, if we get down into discount, I'm not really looking short. But what I would say is go back and look in those circumstances. I know one right off the top of my head, and I'll show you it here. I don't know if it's the monthly or if it's the weekly, but here it is. You remember the end of the world that happened when they hacked CrowdStrike? This was, I think, last summer. Okay. So in reality, right, just take a look. Low up to your high, okay? Why wouldn't I have my candle set here? Low, high, discount retracement, bullish imbalance, run for highs. The Mana model is already complete. I need to reevaluate. I got to reevaluate the range. I got to put the more accurate, right? So from your lows up to your high, remember that nuke, right? This is exactly what Stonks is talking about, where you get that huge retracement to create that monthly imbalance, but it gets you down into discount, right? You may have heard me say this about something like a Roblox. You may have heard me say this about, I don't know, a Soundhound. I've said it about, I'm just trying to think of names that got smoked on earnings and then ultimately got into discount. And then it just takes time to get up through that imbalance. That's literally what it would be. It would be something like this, maybe even longer than just 1, 2, 3 months to get up and through it, right? But once we get down into discount, to me, all short bets are off. We've gotten our discount satisfaction. I know it happens in one shot. It doesn't really give you an opportunity to short it to discount, which is okay, because then you could start, you're reevaluating the range. You're still inside that bullish range. You're looking for the discount retracement into a bullish imbalance. More specifically, in this case, you have a breaker as well. A lot going for it to ultimately shoot price higher. But hopefully that answers that question, Stonks. Ultimately, I look at it as a time. It's just going to take time to ultimately get up and through that level. All right. So if anybody has any questions about that, feel free. I got no problem talking about that. But let's talk about Rumble Premium real quick here. Got to make people happy. All right, so this sponsorship is from Rumble, one that is incredibly important to the survival of the company. When Rumble first started in 2013, they built the platform for the small creator. They didn't censor or have biases. They were fair and treated all creators equally. No one thought platforms would censor political conversations or censor opinions on COVID, but they did. Facebook admitted they fell to the pressure of the Biden and Harris administration. Rumble did not. They held the line. They are attacked daily for giving us a voice to talk to you. They're attacked in corporate media. They're attacked by governments like France. They're attacked from brand advertisers who refuse to work with them. Corporate America is fighting to remove free speech. Rumble is fighting to keep it. Rumble won't survive with brand advertisers. They don't get much of it. Watching our show on Rumble is the most they can ask from you, but if you really believe in this fight and if you have the means, one major way you can help support Rumble survive is joining the Rumble Premium. Join the community that believes in the First Amendment and believes in our human right to free speech. Rumble is offering $10 off with the promo code STUDIO when you purchase an annual subscription. Go to rumble.com/premium and use promo code STUDIO. Like I said, if you have the means and you believe in the cause, now is the time to join Rumble Premium. If you have the means, if you don't have the means, we're just happy to have you watch us on Rumble. And now everybody watching on YouTube is going to light my Tesla on fire or something. Okay, so let's see. What should we go to next? We could do gold, sure. Let's look at gold. GLD. All right, got a couple more. I know. Usually the monthly, quarterly, I like to do them on the weekend, but the problem is that we had one more day, and I know it obviously didn't happen, but it could have very well had a ridiculous squeeze type of day and prevented the monthly from even being able to form. So let's look at GLD. Okay. So yeah, that's pretty strong. Okay. So from this perspective here on gold, let's just walk through the entirety of our range. Historically, you have a low up to your high, you have a discount retracement into a bullish imbalance for a run on highs to complete the Mando model. Low, high, discount, bullish imbalance, run through highs, Mando model complete. Here's your next. From your low up to your high, you have a discount retracement into a bullish imbalance for a run on highs, Mando model complete. Okay, you guys starting to see this? Once you see it, you can't unsee it. All right, well, I can't use this low to this high. Why? Low, high, discount retracement, bullish imbalance. This one's a little ugly, but gets the job done. It doesn't take out the low of the candle that created the imbalance. Therefore, you enter that understanding that prior to your entry, that as long as price doesn't take out this low, the trade is still valid. There she goes. Mando model complete. Now, from your low up to your high, discount retracement. Is there a bullish imbalance? I mean, there is. This is a little ugly, but still plays. Doesn't take out the low of the candle that created it. Gets you down into discount. Here would be the stop out in that case, right? Discount and a run for highs. This would not be one that I would trade, just for the record, right? I would have preferred to actually get down into discount like there, but okay. And then here's what we're working with. Oh, no, we're not. Sorry. Low, high, discount retracement, bullish imbalance. This is a volume imbalance or gap higher. There's your run for highs, Mando model complete. Nobody has a model like this. Nobody. Been on Twitter a long time, right? People come and go. This ain't going anywhere. Okay, so from your low up to your high, right now nothing is suggesting lower. Could we go higher? Sure. Where would I be targeting? Gold is going to 350. How can I ever make that assessment? Price has never been up here before. There's no draw on liquidity. It's just air, right? Anybody giving you a set number on GLD is kind of just guessing. But personally, as someone who obviously has no stake in the game right now, I would prefer some sort of discount retracement before I get anything, right? And currently there's nothing showing me lower, there's nothing showing me higher. It's kind of a no trade at this point for me from a quarterly perspective. Now, if we come down to the monthly, let's just see if the monthly maybe offers us anything different, and I don't think it does. Nope. Okay, from your lows up to your high. Again, no imbalance lower, no buy side liquidity higher. This is really just another no trade for me, right? But again, here, just as an example of getting into a premium imbalance. Okay, so right here, you see this bullish imbalance, right? This is very similar to what we see on the S&P. So let me pull up ES. I'll show SPY because I know people are mostly trading SPY, right? Okay, here's that bullish imbalance here on SPY, right? In premium of your current range. Low, high. Okay. See how we got in and we got out, right? Here's GLD. Got in. It's in premium. It's not something that I'm banging the table over or something that I'm salivating over. But can we justify a move higher? Sure. Of course you can. There's no imbalance. And we had a bullish one, despite it being in premium. Okay. So gold really, either way, honestly, maybe ask a Furu. They might have a better guess than me, but I think at this point, realistically, anything is just a guess. Nothing would apply to any of the trading models that I personally use. So that's GLD gold. All right. So we're really attacking the big boys. You know it. You know we've been having a rough market. If so far we've went over NASDAQ, SPY, Bitcoin, gold, NVIDIA and Tesla. That's all we haven't even gone over these random individual names that get asked for the most part during a bull rally, right? Yeah, ask Peter Schiff, sure. Yeah, we could do Oxy, sure. Let's look at Oxy, okay? So again, we'll do it from a quarterly perspective, of course, okay? So looking at energy or oil as a whole, okay? And if you take a look, now here's the thing, and this is a little funky, but low up to your high, discounted, bullish imbalance. There's your run, okay? Ultimately, from a higher time frame, we actually shifted, but the problem here is that we have relative equal highs. So ultimately, I do believe this is going to go higher eventually. But is the time now? That's what I'm not so sure about. So ready? Let's take a look. Your most recent price run looks something like this. Again, relative equal highs above. From your low up to your high. Let me get rid of this black box. Okay, this is what we're working with. Currently, we are inside a quarterly imbalance, but we are in premium of this quarterly imbalance, right? We are above that 50% mark. And as you can see by this alert that I have, Oxy monthly discount. We'll get to this in a second, okay? It is worth noting that we do have a quarterly bearish imbalance. Do we see this quarterly imbalance in the near term, reject off of this, and then see this? I don't think that's crazy. Let's come on over here to the monthly. Okay. Again, from your lows. Oh, my thing got all messed up. Whoops. Low up to your high. Okay. This is where ultimately I want it. This is a monthly bullish imbalance. Now, could this realistically be here? Am I being a little greedy here with the 41 when in reality we can get into the 43 and then ultimately that would check the boxes here with the breaker and the bullish imbalance? Yeah. Right. Maybe I'm being a little stingy here with this, but that would ultimately be where I would want it personally. But again, do we see this run first to get into that quarterly imbalance, which also coincides with this monthly imbalance, right? But the thing here is that I really don't want to be shorting this because we got into our monthly discount already. Our quarterly has not, our monthly has. I don't really want to play with fire knowing that I have a breaker here, right? But ultimately, I would have liked it to get down into here. When I look at oil and gas names, I kind of always coincide this with CL, which to me, there's so many relative equal lows that I ultimately want energy or, crude oil futures to be down in like this 57 mark. I know that's a pretty big ask, but I think to me that would be, I would be much happier with that versus just putting our foot in the ground here and starting to move higher. Look, that might be a little bit too big of an ask, but for me personally, that's what I would want. So oil and fire, big fire. Target. All right, we could look at Target, sure. Yeah, I'm just, we're kind of winding down here, but all right, let's look at the quarterly for Target. Yikes. Oof. All right, so here's Target's. Wow, look at this. Holy crap. Check this. That's crazy. Sweep. Okay, so at the very least, let me just check one more thing on Target. Let me just see the yearly. Man. So let's really do Target's yearly. Hold on. I don't know why all the levels got messed up, but they did. Low to your high. Here's your discount retracement. There's a ton of relative equal lows here. I mean, I don't think Target is like a defunct company or anything, but here, whoops. Okay, there's the bullish imbalance for the run. Okay, your next one looks something like this. Bullish imbalance. HODL. That was the financial crash in 08. Discount, bullish imbalance, gone. Okay. Since then, we have, we did. Okay. Discounted here. Okay. This is a breaker. Low, high, lower low. Break up and through. retracement back to the high of that sequence, we would anticipate that as acting as a support level moving forward, aka bullish breaker. There's your run. That was in 2017. Okay. So again, like, you might be saying, oh, well, in 2017, Target had a really bad earnings report. I don't care. It's just a discount retracement into a bullish imbalance. But there's your low up to your high. We are currently, we're actually slipping this imbalance here. So we've been inside this imbalance for 2 years now. We're slipping it. Look left. You see this low here. I'm not so confident in that 97. Okay. Look left. There's no imbalance. The next imbalance from a yearly perspective is down at $80. Wow. So I will say again, this is not something I would necessarily short. The reason why I wouldn't want to short something like this is because we are already in discount of this range. If we get it down into discount, all bets are off. I ain't looking to short no more. That doesn't mean that we can't go lower in the discount of that range. And if this could be the draw, but this would really be the area in which I'm looking towards target. Now, the same thing would apply as we go down in time frame. Your first draw, to me, I think this is pretty clear as day, that 98. And then beyond that 98, it gets you down into that imbalance. So personally, I think that's ultimately where it goes. Again, how tradable is that? I don't know. I personally wouldn't. Everybody's different, of course, but yep. So we just swept this low here. We got into a previous bullish imbalance that we've already gotten into. Let's just see if there's a breaker from a smaller time frame perspective. No, there's not. Yeah, I mean, I'm not really all that crazy about Target, to be honest with you. Especially not here. This was really the spot for me to hold on to, and we did not do that. So yeah. So that's Target. Yep, it is an order block. Monthly order block. Yeah. I again, like I said, this is something that I think probably I would have to back test it more to prove it. I think the monthly order blocks will definitely give you more juice than what the smaller time frame will. Don't get it wrong. Like, think about it. Inside that monthly order block, you have, 24, 25, 26 days, however many days minus the weekends of orders taking place. But I personally haven't back tested it enough to prove that the order block is something that I could actually add off of and look to trade. If I were to do that, the criteria would really be the same, entry somewhere inside of this order block with the stop loss at the low of the candle, right? But I don't know, personally, this is not really one that I'm loving all that much, especially seeing that we have this yearly imbalance below us. So that's Target. Sure, I can look at pool and I can look at deck. Sure thing. Go woke, go broke. Yeah, I guess. I looked at yeah, no, I could see it on I didn't know this is true, but I can actually see the YouTube chat here. Yeah. So lucky you if you're on YouTube. But yeah, so I'll look at those two, but yeah, let's see. All right, it was like deck, right? All right. So again, this one could be fun. You want to do it? Let's go back to the great year of 2002. I was a 7-year-old. All right, there's the discount. There's your bullish imbalance. Didn't get in. Uh-oh. Hold on. We gotta investigate this further. Oh, I see why. Sucker. Low, high, lower, low, break up and through. This is a bullish breaker. And also bullish volume imbalance. I wonder if all those EMAs go back this far where you could back test and prove something. I'm going to go out on a limb and say probably not, but whatever. It is what it is. Here's your low up to your high. Here, come on. Here's your discount retracement. Here is your bullish imbalance. Okay. Also, low, high, lower low, break up and through, high of the sequence to act as a support level moving forward. That be a breaker, Sonny. Okay, and it's gone again. Okay, that was in what, 2009? Cool. Okay, here it is again. From your lows, whoops, up to your highs. Okay, here's your discount retracement. Where is it? Here's your bullish imbalance. It's clockwork. Mando model complete. Now, why would price come up here and reject? If only there was, a way to justify this move. Like, why would price come right here and reject? Maybe because you got a bearish imbalance right there. Look how perfect it is. Yeah, those wicks gave you a little bit of a heart attack, but if you take the high of the candle that created it as your stop loss, you are golden. There's your drawdown. Where does price then go to? Bullish imbalance and discount of this bullish price run from your lows up to your highs. There's your discount retracement into a bullish imbalance. There is your run for highs. There is the completion of the Mando model. I'm telling you, this is in 2015, 2013. It all plays. Okay, let's just do our next one. From your lows up to your highs. COVID or just a discount retracement into a bullish imbalance. You tell me. Come on. Come on. Can't dispute it. It's unbelievable. It really is. Again, once you see it, you'll never be able to unsee this. Lows up to your high. Let me guess. Discount retracement into a bullish imbalance for your run on highs? No problem. See you later. And guess what? Setting it up again. Low up to your highs. Discount retracement. Now here's the hardest part. You want to hear the hardest part? Which imbalance is it going to hit to take off? Let's fully dissect. Let's come on over here to the quarterly. I hope this was the right ticker that you guys want to look at, by the way. Okay, here. Low. Again, we could do that same dance over and over again, but I'll just do the most recent two. COVID lows to your highs. There's your discount retracement, bullish imbalance, run for highs, okay? So we'll just do it there. We already did back to 2002 on this one. Low, high, discount retracement. Okay, so we are in discount. That is good, okay? We have a bullish imbalance right here that we just tagged. Very good, okay? This is a bullish order block. This would be a mitigation block if price were to come down here, okay? Zoom out. This checks out pretty good. Come on over here to your weekly. Okay. Does the weekly make sense for us? Let's see. Not bad. Not bad. Swept liquidity in the inverse direction of your overarching trend, got into a bullish imbalance, in discount of your bullish price run. All things good. All good. Yep, and we didn't get down into discount there. Yep. Yeah, this one's pretty good. It's pretty good. Deckers Outdoor. Never heard of it. Pretty damn good. Wow. Yep. Relative equal highs here. Bears volume imbalance right here. This would be the mark to beat. You beat 126 up to 136. It's gone. But this is a really nice one. Really good. That's a much higher time frame setup, though. Just, obviously, that's going to take a lot of time, but really good. All right, and there was one more. Let's see. Deckers Outdoor owns a ton of stuff. Yeah. All right, let's do a pool. Let's do pool. Pool Corporation. Okay, I've never heard of this, but okay, right off the bat, I'll tell you that this is looking like a take these lows right off the bat. Okay, so again, this is one that you can go back in time and do if you want. I'll just do it really quick. From your lows up to your high, here's your discount retracement. Here's your bullish imbalance right here. Sorry, I'll zoom in for you in a sec. Sometimes I just motor through these, but there it is. Low, high, discount, bullish imbalance, run through highs. That's the completion of the Mando model right there. Okay, and then for the rest of the time, from the low set in 2009, which was your financial whatever crisis, global financial crisis, whatever you want to call it. This is what we're working with. So now here's the thing, okay? You might say, well, we got down into discount. Why would price reject right here? It's a sliver. It's a sliver. That is a bearish imbalance, right? High of the candle that created it. We did get down into discount. I'll give you that. But I'm looking the way that this discount run was put in and we left relative equal lows. 1, 2. I personally would not be shocked if price were to sweep through those relative equal lows. Right? If there was an imbalance here, forget it. I'm looking long, but there's no imbalance here. So personally, I think we sweep this, get down into this, and then go. That's just from a quarterly perspective. Let's see the monthly. Maybe the monthly has that imbalance I was talking about. Nah. Yep. Nah. Nothing. This has been a chop fest. I think we could take out these lows, like 278. Is it the cleanest bearish trade? I don't think so. No, I wouldn't say that. Okay. Again, like why would we reject here? That's a bearish fair value gap. Here's another bearish fair value gap. Price gets in, price gets out. Yeah, I think there's too much liquidity here to leave it. So I think that is what's gonna happen. All right. So spreads are crazy. Yeah, and I haven't looked at that one. I miss double deckers from Taco Bell. Yeah. Yep. But all right. I think that's all I got for now, though. So tomorrow morning we'll be back for live trading. Everybody who watched, thanks for watching. I hope it was insightful, and I'll catch everybody soon. I don't know when the next public live is going to be, but we'll talk anyways. So I'll catch everybody. When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon.